Welcome to this week's market drama. We'll start with stock market, which was up this prior week. The S&P 500 was up almost 1%. NASDAQ was up even more week over week. NASDAQ's actually up now 17% year to date, which is crazy considering everything that's happened this year. But to a certain extent, I guess, understandable of if it's going to go up, it's going to go up by a fair bit, considering how much it went down last year, right? So this is one of the more volatile parts of the stock market. The U.S. Aggregate bond index was up last week as well, is now up 3.6% year to date. So it's a very different picture so far this year versus last year, when both bonds and stocks were down. Last week, when it comes to economic data, we had inflation data, right? Core CPE index came in as expected at 4.6% year over year. So not a lot of news there in the sense of it hit what it was supposed to hit. And the story there is inflation is coming down sequentially, meaning it was like 6%, then 5%, now 4.6%, but it's coming down at a slower clip than maybe everyone would want it to come down. We also had GDP data for the first quarter that came in below expectations at a 1.1% annualized growth rate. The main detractor there was a sharp decline in inventory accumulation. This is the most volatile part of GDP, so I wouldn't read too much into it. The housing data also came in worse than expected, but we saw strong consumption growth at 3.7% year over year, or I should say annualized growth rate. That's a key metric there, considering 69% of GDP is consumption. So as long as consumption holds up, it's unlikely to see a severe recession. So we'll have to keep an eye on those numbers as they come in the coming quarters. On the earnings front, the first quarter of 2023 earnings season is more than halfway done. We have seen better than expected numbers, so actually positive surprises more than we usually do, especially on the sales front. We had 74% of the S&P 500 companies reported a positive revenue surprise. A great example is Facebook, which had earnings decline year over year, but they provided guidance for this quarter on revenue that was better than expected. The stock was up more than 10%, right? So I think that shows that expectations for a lot of these stocks, even though the numbers are not great, they're beating those expectations, and it shows that guidance has come down a fair bit. Another data point around earnings that I thought was interesting, this came out of Bank of America. 2023 consensus EPS estimates stopped falling. They've been falling since June 2022, right? They fell already 13%. So the question becomes, are we seeing a floor to expectations for earnings this year? And if so, this definitely explains why stocks are going up despite the fact that earnings are negative year over year, right? We're not having a great earnings season, but the market's always looking forward. This week, the big item is the FOMC. The Federal Reserve is meeting Tuesday and Wednesday. And on Wednesday, there's an 85% probability, according to the future market, that they're going to hike 25 basis points. The big question is, are they going to guide us towards saying we're done, we're not hiking interest rates anymore? And even better, when do they expect to potentially lower interest rates? They're not going to tell us that, but that's what the market is really going to be focused on. On Friday, we also have employment data for April. The forecast is 180,000 in payroll, and hourly wages expected to be at 4.2%. Obviously, employment is a key component of the story here. If employment continues to hold up, it's unlikely we're going to see a recession, or especially a severe recession. So stay tuned for data on this week, next week. Take care.